Welcome back. The S&P 500 has spent the month of December so far in 6,000 point plus territory. And of course, it is up more than 20% so far this year. Our next guest expects it to rally 10% from here. His 2025 target on the S&P 500 is 6,700 points. Let's welcome Tim Urbanowicz, Chief Investment Strategist at Innovator Capital Management. Tim, thanks a lot for joining us. So you're not of the view, obviously, that these markets are overpriced and ripe for a correction. Why not?
Well, Paul, I wouldn't necessarily say that. And I think what makes this so tricky is if you look at the gains this year on the S&P 500, about 61% of those gains can be attributed back to valuation expansion. And really what that comes down to is investor optimism that the economy is going to continue to be very strong. You're going to continue to see a lot of this good news play out. And we do think those animal spirits, if you will, are going to continue in the new year. We expect valuations to continue ticking higher. Earnings growth will be strong. But more so than ever, I think risk management is incredibly important in the new year. Because if anything playing out here doesn't go as investors expect right now, with animal spirits running so high, confidence through the roof, there's a lot of downside that could be had. Specifically when we look at a lot of the policy proposals from the Trump administration, investors are very excited about regulatory rollback, tax cuts, all these different measures. If they don't go as planned, if inflation doesn't go as planned, if Fed cuts don't go as planned, which is a very big risk, then you could see significant downside. Now, again, that's not our base case, but I do think investors need to be very prepared for those scenarios, just given the sentiment right now that continues to tick markets higher.
What are your thoughts on valuations and earnings? We hear a lot from people who think these markets are very richly valued, that if multiples are going to expand, earnings have to grow faster than multiple growth, that earnings really have to pick up. What's your view of earnings at S&P 500 companies during the year, and can earnings growth accelerate to the point that it would warrant further multiple expansion?
Well, I think it's very interesting, Paul, and everybody gets concerned about valuations. And I think what's very clear out of the gates is valuations by no means are a timing mechanism for the markets. And if we look, our team looked back historically at looking at when the S&P 500 was at or above the levels it's at now, about 22 times forward earnings. And what we found is that in the 12 months following, the S&P 500 typically delivers around 20% return, which is very surprising given the age-old mantra that you want to buy low and sell high, right? But you need to keep that in the back of our head. That's why I think it's so important that people stay invested in this market despite where valuations are, cautiously, of course. But then to your question on earnings, we do think earnings can continue to grow. We think the backdrop is ripe, especially if a lot of these policies that are being proposed can get implemented, specifically the regulatory rollback. And I don't think it's going to necessarily help all companies across the board evenly. We think tech companies, financials, energy companies are going to be some of the big beneficiaries of that rollback in regulation. But still, Paul, I think the number one thing that we need to be focused on right now is you want to be invested, but risk management is incredibly important. It's very hard to determine where the markets are going in a normal environment. But when you have such optimism and a reliance on, valuation expansion and optimism continuing, it's very difficult to predict. And for that reason, it's really about staying risk aware and not risk off in the new year.
What type of risk management tools do you urge your clients to use?
Well, Paul, right now we're seeing just a wave of interest in options-based strategies like buffered ETFs. And two of the strategies that we've highlighted specifically in our 2025 Outlook and Investment Playbook are KJAN, which is a small cap 15% buffer on the Russell 2000. So it gives you access to small caps if those continue to tick higher for about the first 17 or 18% of gains. But then also on the downside, you are protecting against the first 15% of losses. And we think that's very important. The other one for clients that are really worried about the valuation expansion that has taken place here, we're looking at the 100% principal protected strategies. Those are very, very important. We look at those strategies. We think it's a great way to get access to the market protect the downside, get more of that cash invested. So we have a lot of clients that are gravitating toward those strategies as well. But overall, Paul, we think it's coverage for a wide range of outcome. That's what it's all about. And again, that all comes back to the optimism that's driving this market. We want to make sure that we protect against anything going the wrong way, but we still have that upside exposure.
Small caps have rallied significantly during the latter quarter of this year or so. Do you see that continuing in 2025?
We do, Paul, and I would say, it's going to be a tug of war all year long. You have bullish catalysts on one side, you have bearish catalysts on the other. We think that leads to excessive volatility in small caps, but at the end of the day, they are going to be able to win out. You're going to be able to see those small caps tick higher. I think very encouraging recently, we've seen an uptick in small business confidence. We've seen PMIs start to tick up, which we want to see those continuing. But at the end of the day, Paul, we need to see earnings expectations increase as well. Right now, we've had prices that have rocketed higher, earnings expectations that have been flat or even tailed off a little bit. We need to see those two catch up. We think they will, but again, it goes back to that theme of cautious optimism.
Our earlier guest in the show likes the U.S. financials, the bank stocks alike, a lot in 2025. What's your view on that sector?
We think they can do very well, and specifically a lot of those smaller regional banks, those are going to be the ones, Paul, that benefit extremely well from the regulatory rollback. They've been bogged down over the last couple of years with those increased regulations, and I think any type of rollback is going to benefit those stocks greatly, and specifically the smaller regional banks where that burden is greater.